K12's hi. Today we are doing stock valuation methods. Although there is a couple of these methods, we will only focus on two, namely FIFO, which stands for first in, first out, and weighted average. Remember, this is one of the topics on which you can score good marks, so stay with me and you'll do excellently well. First on the list is weighted average. Weighted average says before we determine the value of closing stock, we first need to determine the average price of each unit. This is how we determine the average price of each unit. As your numerator, that is numbers on top, you will have the monetary or financial value of opening stock plus purchased units plus carriage or transportation costs, if any. You minus those units that you return to suppliers and then subtract donated goods. As your denominator, that is numbers at the bottom, you'll have the corresponding opening balance plus purchased units minus returned units to suppliers and then minus donated units. The answer that you get, you multiply by the number of units on hand. Then that will be your monetary value of stock on hand. The question is, when is it applicable to use this valuation method? Number one, it's suitable for goods which sell fast, that is, goods with high turnover rate. Number two, on homogeneous or similar goods. It's also suitable for goods with high reorder rate, owing to the fact that you don't have to trace every cost per unit sold. Here are some of the advantages of weighted average. It is easy for management to analyze operating results as the costs are evened out. By this I mean, because we have the average price, it means the cost per unit is the same across all units. Number two, it is easy to apply if the number of units sold is not high. Advantages have disadvantages. So what are some of the disadvantages of weighted average? Because this method uses average price, it will be difficult to identify the accurate cost price of each unit. This makes it difficult to price our goods fairly. It's also difficult to apply if the number of units sold is high. This means it can be time consuming. Now we move to the next stock valuation method, which is first in, first out. So, according to first in, first out method, the goods you bought first, you sell first, meaning you sell first your oldest goods. Therefore, in determining closing stock, your oldest goods are ignored since they have been sold already. This stock valuation method is applicable to goods with limited shelf or life span. So what are those goods? Examples include bread, mobile phones, and milk. Why mobile phones? Because of technological advances. Advantages of first in, first out include the following. Because it's universally used, it's easy to understand. Number two, it follows the natural or conventional flow of goods, with the oldest being sold first. It simplifies our bookkeeping, and as a result, less mistakes will be committed by our bookkeepers. Financial statements also are harder to manipulate, therefore, less fraud will be committed. It gives an accurate reflection of the company's financial affairs. When it comes to disadvantages, we can think of one. It may result in higher income tax for a business because the gap between costs and profit is usually higher. So this disadvantages a business in that it will have to pay more tax than it will do with weighted average. Let's do an activity on FIFO method. The information presented here belongs to Felix Traders, which is owned by Felix Max. Their financial year ends on 28 February 2014. We need to calculate the value of closing stock using first in, first out method of stock valuation. We are also required to calculate cost of sales of laptops, and they say Max wants to change his stock valuation method to weighted average method. And the question is, how will this change in policy impact on the financial reporting of their business? Let's look at our records. At the beginning of the financial year, we have 15 units with the total thereof being 51,000. We have total purchases amounting to 62, the total amount of which being 329,360. And we have transport cost per unit there, 230, 250 for August, 260 for November, and 280 for January. We have 7 units which were returned to suppliers. We have closing units being 17. So, going further down, we have 3 units from August purchased were returned because they were not according to the order placed. We are also told that 4 units from the January batch were returned due to minor damages in transit, meaning in movement of these goods to our premises. In both cases, transport costs were borne by the business, meaning the business had to pay this out of its pocket. Laptops are sold at a fixed selling price of 7,500 each. Remember, FIFO says the stock that you buy first is the stock that you sell first. As such, it means the stock that we have on hand is the last stock that we bought. So remember, we have 17 units on hand. Let's go back to our previous slide. So which month do we refer to in calculating the value of closing stock? If we have 17 units on hand, we start with January because it's the last month that we bought goods. So we will move to November if we still have some goods left. So let's go back to this slide. There you can see that 3 units from August were returned and 4 units from January were returned. And that in both cases, the transport costs were borne by the business. So in calculating the value of closing stock, we will go to January, which is 16 units, subtract goods that were returned. The answer will be 12. That 12 we multiply by, open bracket, 280, which is transport cost, plus unit price of 5,650. The answer will be 71,160. We still have 5 more units in order to make up for the total of 17 units. So that 5 we will take from the November purchases. So we will say 5 times, open bracket, 260, which is for transport, plus 5,520, which is the unit price, close bracket. It gives us 28,900. When you add the two together, they give us 100,060. Then that will be the value of closing stock according to FIFO method. In calculating cost of sales using periodic inventory system, we first have to determine the value of opening stock. In this case, it's 51,000. Add purchases, 329,360. Subtract returns, which all in all amount to 38,630. You then subtract your closing stock, which is 100,060. Therefore, cost of sales will be 241,670. Max wants to change his stock valuation method, which is FIFO, to weighted average. How will this change in policy impact on the financial reporting of the business? Here are some of the answers to the question. The first one is The profit may be different. It will affect the inventory or stock figure in the statement of financial position or balance sheet. And of course, income tax amount may also be different. Now that we have done FIFO, let's move on to the activity on weighted average. Plus or minus 27 traders sell scientific calculators. The business is owned by Pete Fountain and the information relates to the financial year ended 31 August 2016. The business uses the periodic inventory system and the weighted average method to calculate the calculators. The required part there says calculate the value of closing stock. This information here relates to opening balances, closing balance, and purchases. So we are told that at the beginning of the year, we had 200 units to the value of 30,550, and that 30,550 included carriage or transportation costs. At the end of the year, we had 160 units on hand. Purchases there in total amounted to 1,005 to the value of 156,050. We are told that 10 calculators from the November 2015 batch were donated to a local school as prizes for a raffle. 5 defective calculators or dysfunctional calculators from the January 2016 purchases were also returned. These were returned to suppliers and a refund for the cost price and carriage were obtained. E there says 993 units were sold during the current financial period at a fixed selling price of 220 each. So how do we determine the value of closing stock using weighted average? Remember the formula. Your numerator will be financial values or monetary values. So we will have the 30,550, which is our opening stock, plus 156,050, which is the total value of purchases, minus 1,400, which is the goods that we returned, minus 750, which is all the donated goods. With that, you have corresponding opening stock of 200 plus 1,005 there, minus 10 goods which were returned, minus 5 goods which were donated. Our answer will be 184,450 divided by 1,190. Then it means we have 155 as the unit price, or what we call average price. That average price of 155 we multiply by 160 units on hand, then our final answer will be 24,800. That's it, K12s. I hope I've been of great service to you. You can continue to ask questions. Remember to consult your teachers where you need clarity. You can even ask your peers to provide clarity on some of these concepts. With that, bye-bye and take care.